Today we have Carlos Medeiros, Emeritus Professor here from Federal University of Rio, and Florencia Medici from Instituto de Estudios en Ciencia, Tecnología, Cultura y Desarrollo from Argentina. And we're going to be discussing about the external and policy constraints to growth in Latin America. It's a pleasure to have you both here, and we're looking forward for the very good discussion. So we will start with Professor Medeiros and then go to Florencia. We'll take questions collective at the end. Please, Professor.
Well, thank you very much. This is an idea not so new, not so old, about this discussion with financial commodity dependency and growth constraint in new millennium. And the idea is to make some questions, what is different from the old pattern of Latin America and what is. So this is the broad idea. I will start with this, how can I say, this synthesis of the paper that is a work in progress. The idea is that this paper is, I discuss not Latin American because, where is Moreno Bridge? That is, Mexico is quite different from the problems that I'm here. This is more connected with South American countries, not Latin American countries. But the idea, in the last decades, I'd like to highlight two modern, or not so modern, aspects or problems that is highlighted by structuralist approach. This is a commodity and financial dependency. My point is here, I'd like to say that I see that the Chinese rise in new millennium brought about major change in international division of labor and propositions very common as privatization and early deindustrialization explained by wrong domestic policies underestimate the historical change in world economy. This is the one point. And second is, in relation to the fragility and macroeconomic vulnerability associated with financial cycles, it is argued that due to changes in financial instruments, and especially in exchange rate regimes adopted in most economies, South America, and in particular Brazil, became less vulnerable to balance of payment crisis than they have historically been, especially in the 90s. Only two economies reproduce the same old problems and patterns previously fall. Argentina, that Matias is the great specialist here, and Venezuela. In Venezuela, I just will make some few remarks. That's enough. Finally, if I have time, it discusses some opportunities and limits for a developmental strategy adjusted to new international conditions, such as the resurgence of protectionism and new priorities imposed by the climate agenda. This is the broad idea. But let's consider the very beginning aspects. In his seminal essay, How Prebschi, in 49, in what is called Manifesto da CEPAL, ECLAC's manifesto, consider that due to Latin America's specialization in international division of labor through the export of primary products and import of industrial products, its development was systematically constrained by insufficient capacity to import and recurrent balance of payment crisis. Although his argument was based on different elasticities and propensities to import and export, perhaps she support a structural historical method in his analysis of Latin American problems. The essential issue was the exhaustion of the pattern of growth led by export as the main cycle center shifted from England to the United States. Given protectionism and the scarcity of foreign exchange initiated in the 30s, industrialization was a forced path to economic development. Prebisch centered on trade specialization, but the pattern established in the continent in the 9th century was, I have a discussion on a paper published many years ago, is called a financial and primary export model. Because from its very beginning, it was linked to high levels of external financing. It's interesting to distinguish two distinct issues that are expressed in the country balance of payment. The first dimension is the productive structure characterized by strong heterogeneity in productivity between sectors. Import substitution was necessary for higher growth, but after an uneasy stage, industrialization encountered increasing difficulties when included important segments of capital goods and high important components. Unless the development strategy succeeds in achieving high export growth through diversification, further industrialization may generate unsustainable trajectories of external indebtedness. This is something that is very different from Novo Desarrollismo, is this. Although a country without convertible currency can grow with deficit in its current account balance, this has limits determined by its evolution in relation to the export growth rate. This is what I say, that is the rate that defines the country's external solvency, and by its external liquidity that depends on the relationship between the stock of short-term liabilities, public and publicity guarantee debt vis-a-vis its reserves. But I say that the external financial fragility has its own autonomous dimensions. Latin American story shows trajectories of excessive external debt that does not arise from a need to import, but to speculative and financial reasons. This process of overborrowing, engendered by financial innovation and policies taken cyclically by international finance system, generates recurrent macroeconomic stability and balance payment crisis. The greater this fragility, the more domestic economic cycle is determined by the evolution of international financial system and monetary policy of the hegemonic country. As the national currency loses its sovereignty, the national decision centers, this is expression of Celso Furtado, the national decision centers are transferred to the creditor countries and holders of dollarized assets. This financial dependency, a structural characteristic of economies financially integrated in the world economy without convertible currency, international financial system, is transmitted to real economy through restriction it imposes on economic policy. But this is external financial fragility is influenced by geopolitical factors and exchange rate regime. Depending on the financial restriction of balance of payment, the country undergoes a low growth trajectory, oscillating between periods of growth, spurts, and recessions. But this circumstance is influenced by geopolitical external factors, by the type of financial vehicles, and by the exchange rate regime. In fact, in Brazil and South Korea had the two largest external debts in the early 80s. But while in Brazil, the high increase in Federal Reserve rate of interest led to a long-term balance payment crisis, in Korea, Japanese banks extended credit and had structured debt over large chaebols, avoiding a long balance crisis. The prevalence of primary specialization and high current account deficits in Canada and Australia were not obstacles to the convertibility of their currency. The Canadian dollar became fully convertible in 1952 when Canada exported basically primary goods and the current account showed high deficits financed through loans and investments. The same happened later in Australia. In 1983, the Australian dollar became fully convertible. The deficit in current account strongly increased, but it was easily financed by loans and investment. This is just to say that different stories and experience cannot be fully explained by economic reasons or by the same old story of elasticities of export and import. South America in new millennium, this is the point that I'm saying here. The question is, the same old story, trade specialization and financial fragility were strongly exploited by structuralist analysis on the major balance payment in decrease in the 80s and the path followed by Latin America in the 90s under the Washington Consensus reforms. Okay. Both dimensions constitute the common ground between several structuralist approaches on the main problems of Brazil and South American countries in the last decades. The point is the question if there is something that is different now than it was before, or the same old story of the 80s and the 90s is still are predominant in the explanation of the main problems of Latin America. And so this kind of early deindustrialization and primarization have been emphasized, particularly by neo-developmentalism. This is a lot of paper for this. But other dimensions are explained. For instance, early financialization, Professor Vernenko with the Caldentin has just published something like this. Or Martina Bellis, old friend of us, on peripheral finalization. Both were driven, the same process, by neoliberal reforms that began in the 90s and were expanded in the new debt cycle after the great financial crisis of 2008. Well, that's some critical points on this idea. The first is there's this discussion that's what is going on to understand this kind of change after the last 2 decades. This process of commodity dependency. This is a UNCTAD. This is a special issue on commodity dependence. Occur simultaneously with the global displacement of labor-intensive manufacturing activities to China. The combination of both changed the terms of trade of goods, favoring primary goods, and result in land economies. This is the old Adam Smith expression to this kind of our economy. This is land economy that has a lot of natural resource. But it resulted in land economies in relative increase in the share of primary exports, primarization, and in general decline in the share of industrial production, GDP, deindustrialization. Both processes should not be confused with the industrial decline and productive regression from endogenous transformations associated with low investment and economic crisis. This process, initiated in the 90s, were also present in the region, although not as higher as those expressed in conventional measure on privatization and industrialization, highlight in contemporaneous structuralist analysis. So, what is the meaning of this kind of premature? Premature related with what? With the general GDP per capita? But this is not historical method of CEPAL. Huh? This is other thing. It's more connected with Rostov or... In relation to financial fragility, it is argued that the financial conditions that have prevailed in the recent decades are very different from those that have prevailed in previous debt outbreaks. This is one point that I'm trying to apply in this paper, but this is not nothing original. This is Serrano, Suma, and I have a paper on this, and there is an excellent thesis here, Bruno Ferreira, this is here. But the new international circumstances and domestic policies adopted since the beginning of the millennium reduces the external vulnerability and the risk of sovereign debt, avoiding the exchange rate crisis even in the most uncertain and volatile conditions after the great financial crisis of 2008, when external private debt increased. Although this risk has returned, particularly in income economies in low-income economies after the pandemic, lower commodity prices and high interest rates, it has not generated a balance of payment crisis, as it occurred in the 90s and the 80s and the 90s, affecting all peripheral economies. Among the countries of South America, only Argentina and Venezuela constitute great exceptions of this change, reproducing in the last decade deep financial fragility and consequent solvency crisis and external liquidity crisis, but for reasons very different from those considered in recent literature on peripheral financialization. The point is that there are two different decades in the new millennium. The structural impact of the rise of commodity prices and expansion of Chinese demand on the continent, with the exception of the Mexico, whose main external insertion is with the NAFTA in manufacturing activities. Along the 2 decades of the century was the enlargement of its trade specialization based on export of food, oil, minerals, and import of industrial goods. Despite this primarization reinforced by strong expansion of foreign investment, the 2 decades were very different in terms of economic performance. In the first, South American economies grew much higher than in the 90s and similar to other peripheral countries. There's no difference from the world and developing countries here. But in the second decade, growth was much lower. This regional discontinuity was essentially made by the evolution followed in Argentina and Venezuela under acute balance payment crisis, and in Brazil, which, on the contrary, did not face any restriction of balance of payment. This was, Ricardo said, is the policy constraint. This in the first decade, the pink wave, the beginning of the 2000s, the risk of sovereign debt and the collapse of the exchange rate constituted the main obstacle to the resumption of economic growth in South America. The election of Hugo Chávez in Venezuela in 1998 inaugurated a new direction in the region in favor of social inclusion and higher growth, but this only took hold after changing international trade and monetary and financial conditions. The introduction of administered float exchange rate regimes in most economies reduced financial speculative activities against the national currency. Progressive governments have nationalized the extraction of natural resources, distributing through taxes the income of the export sector to various economic and social activities with a great state control. These policies corresponded to the reaction to Washington consensus. But there is no structural change here. This growth strategy was based on export of raw materials and high investment and public expenditure, especially in mining economies with the public revenues linked to the export sector and household consumption. Despite its success in terms of growth and poverty reduction, even in Brazil, the industrial policies implemented did not change what I said, that's Luciano Coutinho, that coined this expression, a regressive specialization created by neoliberal reforms along the 90s. For the neo-developmentalism, the appreciation of real exchange rate was the main macroeconomic problem of this strategy. The slowdown growth after 2008 and the industrialization would be consequences of this imbalance of this price. Although it can explain the strong growth in imports that occurred throughout the first half of the decade, this perspective encounters great explanatory difficulties after the great financial crisis, when in the case of Brazil, real exchange rate strongly decreased without significant impact either in the propensity to import or export. The hypothesis of peripheral financialization does not discriminate clearly between the two decades, but considers that the expansion of financial flows, especially in the second half of the decade, increases the financial vulnerability of these economies, weakening the investment rate. Indeed, after 2008, driven by Fed interest rate reductions, and new financial instruments, there was, in developing countries, a strong growth in external debt, especially in private non-financial companies, and a significant volume of external investment. In Latin America, as well, debts have grown faster than GDP and export, but the region's economy that suffer balance payment crisis were precisely those that were out of these inflows, and was exactly the case of Argentina and Venezuela. Historically, Latin America, and especially South America, have been large recipients of foreign investment, concentrate mainly in natural resource, but also especially in Argentina, Brazil, in the manufacturing sector, but more oil, biofuels, and automobiles, and communications and service in general. Besides speculative activities that occur recently, and a new wave of foreign direct investment, including large mergers and acquisitions, was especially linked to renewable energy and the mining of strategic minerals associated with green energy as copper, molybdenum, lithium, gas and oil in service, public utilities, and financial services. The nationalization increase and dependence of Brazilian economy investment cycle on decision of large international companies just increased as well. Current account debt has increased. This wave of financial inflows, mainly in Brazil, in Chile, in Colombia, included the expansion of private sector debt and was accompanied by a no less significant increase in the current account debts. Alongside the increase of this kind of flows, the payment of interest and dividends associated with these investments enlarged. For instance, there are some estimates that in case of Venezuela, Argentina, Peru, Paraguay, and Bolivia, the contribution of foreign international investment was negative. But not in Brazil. This service also increased, but the inflows fully cover the current accounts deficit and spending reserves. There was also a reduction in external liabilities denominated in dollars, a kind of de-dollarization, increasing non-residents' investment in shares and bonds denominated in Brazilian currency. The net transfers of resource has decreased and become negative in several countries, but the maintenance of high level of reserves against external liabilities and the relatively low level of public sector external debt avoided that after 2008, the spreads of Latin American public and private bonds increased substantially in the following years after the Great Crisis. One notable difference from the 90s was the floating exchange rate regime and the composition of capital inflows, mainly for investment in securities dominated in national currency and not in sovereign debt. Under this circumstance, finance speculation falls entirely on the investor and not on exchange rate regime. Thus, the strong wave of short-term financial flows did not result in the well-known sequence of appreciation, currency increase, devaluation, typical of the 90s. The near lost decade after 2010 and the reversal of progressive policies at the end of the decade cannot be fully interpreted as a result of a balancement of payment crisis generated by the primary financial export model. Exception of Argentina and Venezuela. Brazil, mediocre performance was mainly induced by changes in internal economic policy, with the impact of Brazil was very important in South America in general and in Argentina in particular. Other South American economies performed not very different from other peripheral commodity export economies. The last decade dismantled the progressive pendulum, the pink wave in South America, and right-wing governments, not only in Brazil, took power in the main economy, but this return was relatively short, and in recent years, governments with a progressive agenda were elected in Brazil, Colombia, and Chile, although with a great exception of Argentina, with the election of Milei, an ultra-liberal, anarcho-capitalist government in 2000, last year. So, let's consider this circumstance in what we can say. Old and new challenges. In the current context marked by the great rivalry between the United States and China, strong resumption of industrial policy in the United States in Asian countries, relocation of production chains, and dispute for strategic minerals, the region is faced with old and new challenges. The first would include recomposing industrial production chains, import substitution, and the increased investment in infrastructure and the strategies to reduce income inequalities and environmental degradation. New challenges and opportunities arise connected with recent technological transformations, new priorities, and the reorganization of international economy. Highlight here is the construction of there is a long discussion what this kind of new physical infrastructure, especially in telecoms and renewable energy and digital infrastructure as well, as a necessary basis for a current technological modernization. So, the region faces a crossroads. To build a development road reproducing some national trajectories in developed and developing world is a real possibility for economies that have a large domestic market, as in the case of Brazil. Or maybe this, or under the power of the vested interests and conservative economic policies, it may simply follow its historical, traditional, or peripheral growth regime. Besides these economic and political restrictions, the development alternative is challenged by some environment considerations that considers that ongoing oil gas investments in the region are incompatible with a sustainable trajectory, and the new extraction of minerals like lithium associated to green technologies is intrinsically harmful. Both underestimate the real movements underway in the United States, China, Asia, and a lot of countries, which have combined high investments in renewable energy without discontinuing investment in oil and gas so as not to interrupt economic growth and investment in production chain. In relation to extraction of new minerals, the central economic problem is to create a comprehensive development strategy toward upstream activities. This was what happened in China with the industrialization of rare earth. Extractive activities could be accompanied by industrial strategies for upstream chains, such as refining and petrochemicals in the case of oil, and the production of electrical vehicles, wind engines, and solar panels in the case of lithium. In relation to environment issue, it must be considered that although mining is one of the main forces of water pollution and environment degradation, deforestation, it's possible to delimit territorial spaces in which this investment can occur with less negative impacts, prioritize fewer polluting methods, use different techniques, and so on, so on. So, a new version of national developmentalism finds its great difficulty, not on these technical problems, but from my point of view, in the set of economic and political interests built since the 90s, expanded with the type of internationalization that has occurred in the last decade. In Brazil, this is a discussion for our colleagues, in particular colleagues Brazilian, connected with what to do. In Brazil, a country that could lead regional development path, despite some initiatives from the recently elected government, the main business organizations, political parties, and corporate media defend a macroeconomic policy that excludes a greater role for public investment in old and new infrastructure required by a development strategy. The dominant perception in Brazil, in general, in the region after the COVID pandemic, is that there is no fiscal space for a higher public investment. And therefore, the construction of sustainable investment cycle will depend to a large extent on new private investments in form the public-private partnership, new external investments, and new loans and financial mechanisms, especially linked to environmental strategies. Thus, although there are opportunities in South America for a resumption of a national development project driven by investments in economic and social infrastructure and energy diversification, there are no political coalitions that support at that national level and consequently at regional level. They seem to meet once again a development road centered on commodity exports through regional export corridors, or attraction of foreign investment and new forms of fundraising aimed especially at green business in new forms of energy, in the extraction of metals and related service led by large multinational projects, but with reduced impact on the main productive structures. So that, I will finish here. Okay, thank you very much.
Thanks for the invitation to committee organizers and Ricardo, and it's also a great honor to be here sharing this panel with Professor Medeiros. Well, the name of my presentation is a discussion about inflation in Argentina, distributive conflict in a context of high financial fragility. But this presentation is based on a paper who was published in January, and it is co-authored with Ramiro Álvarez. It was published in Economia Internazionale in a special issue, which were edited by Juan Carlos Panico, and Martín Puchet. Well, motivations. In Argentina, the inflationary dynamics since the late 90s has been more intense and persistent than in the rest of the South America economies, except for Venezuela, of course, taking into account the period 2002, from 2002 to 2011, for South American country, only Venezuela and Argentina had persistent inflation rates higher than 10%. Venezuela throughout the entire period, and Argentina in 12 out of 18, just before the pandemic. So, and in contrast, the other countries had inflation rates higher than 10%, only in the no more than 3 years, in the beginning of the century and during the global financial crisis. So why? Why is the problem with us, the Argentinians? Its other motivation is the current inflation rate is 274 annually, and it's clear we have accelerated inflation. According to our president, the cause of inflation is the quantity of money in the economy, primarily generated with the fiscal deficits, of course, but it is not so worried. The worry is that many economists in Argentina, many of them also perceived heterodox, think the same. Thinks that the cause of the instability, macro instability in Argentina is some problem, or is something related to the fiscal order. So well, and we live in Argentina, so we have many motivation to write this paper. And the idea, or the aim of this paper is to give, or to try to give a coherent explanation about the inflation in Argentina, and stop to talking multi-causality and these things. Well, we argue that the inflation in Argentina, especially in the last decade, can be explained by the devaluation triggered by the balance of payment performance, especially the financial accounts, especially because of the financial deregulation in the last decade, the last year. In this scenario, conflict inflation manifests through a persistent exchange rates wage spiral. The inflation rates become so volatile that foster unstable expectation and speculative price revisions. Well, we have, with Ramiro, we see that we read again a paper of Tavares and Beluso from 1984. We saw that this paper described very well, especially the inflation during the last year. Tavares and Beluso emphasized that the systematic readjustment of the valuation expectation is a key factor to explain the accelerated inflation, particularly when the central bank lost the ability to control the exchange rate because of the lack of international reserves. And in a conflicted society, as Argentina, this dynamic is highly destabilizing and foster inflation if wage claims are triggered. So we have financial fragility, balance of payment problem, political stalemates, and well, inflation. Some concepts to talk about Argentina that you know. Argentina is a peripheral economy, so it's a price-taker economy, so the appreciation of the national currency increases the price level. Technical dependence, financial dependence, and in high inflation regime led to changes in income distribution that are incompatible with our history, habits, and labor institution, resulting in an intense distributive conflict under pendulum governments that reflect a situation of political stalemates. So I would like to do a really summarize about this period from 2003 till now. We can see we have two pendulums in this period, four pendulums. The first one from 2003 to 2015, during the government of the first one of Nestor Kirchner and both of Cristina Kirchner. During these years, during the first year of this period, the external constraint wasn't operative because of domestic and international reason. Domestic because Argentina was emerging of a deep economic crisis when GDP decreased 11% and the imports decreased 50%. The government was in default, it said, with the IMF. And in that moment, well, the international situation, you know, improved, primary prices, liquidity, etc. That reason allows Argentina not to have external constraint by almost a decade, with the government, well, the part of the pink wave, which implemented a series of progressive policies and expanding public expenditure. So, what about inflation in this graph? Well, in this graph you can see, I don't know if you can see, but I'll say, begins in 2003 to the end of the 2011. We divided the first period in two. The black line is monthly wage index variation. The gray line is monthly consumer price index variation. The dashed lines are the trend of both. And the red triangle are the annual wage variations. So it's clear, particularly in this period, we can see an improvement in real wages, an important increase in real wages, at the gap between the trend of the nominal wage variation and inflation was big and became to be slower. In this part, we have an inflation around 2% in the worst moment monthly. That is an inflation caused by the improvement on the real wage. And it was clear the improvement of the labor share in the economy. During the 90s, in the beginning of the 90s, the participation of the labor in the GDP was around 45%. We end the convertibility regime with 30, and according to the statistic, at the end of the Cristina Kirchner government, the participation of the labor was 50. So in this scenario, we see the same graph for the rest of the period. The pressure from business and export groups to implement a competitive exchange rate policy begins to threaten the trend of real wage recovery. So the social conflict between the primary producers and the government obviously supported by unions, restates the political stalemate. So we have in this period some things. First, the political statements, then the increase of the international prices. A third, the beginning of the problem of the balance of payments. We started to have deficits in the current account in 2010 and in the trade account at the end in 2011. So in this part the government started to implement trade and financial restrictions. This begins to generate devaluation expectation. Moreover, the pressure of devaluate the currency. So in this part, the improvement of the real wages were less and even negative in 2014 after a big depreciation at the beginning of the year. So considering the conflict between real wages and profit rates, the low interest rates, even negative in real term, try to ease the distributive conflict at the expense of a growing expectation of devaluation and capital outflow. So we have capital outflow also in this period. So Argentina was again found its major constraint in the performance of balance of payments, leading to the implementation of these restrictions that erodes popular support for the government within a context of economic stagnation and real wage decline. Which were the anti-inflationary policies? In this period, the stable nominal exchange rates, the control on foreign exchange rate market, the freezing of public utility rates, price control in general, it was the key. However, the chronic loss of international reserve, of course, reduced the government's ability to control the nominal exchange rates. This explains, in part, of course, the defeat in the 2015 election. It is a similar graph important. So, well, we have the first pendulum swing with the election of 2015. when Macri, the right-wing government, took place. Of course, Cristina Kirchner had many problems, financial problems, trade problems, low interest rate, capital outflows, and even the litigation with the holdouts. All need to be solved. But from my point of view, the main financial instability that we are suffering now was generated in this period that begins in 2016. We had the classic cycle of over-indebtedness. What I don't know if, I think it was so short, the short cycle ever, because this cycle only 18 months. It was, well, regarding inflation dynamics, again, the new government have the conventional diagnosis of inflation. Inflation is because of the excess of demand. According then, the prices was in the blue, taking into account the blue exchange rate, so they eliminated the currency control. And they regulate the economy. So from December 2015 to July, the first 6 months ever, the nominal exchange rate grew 62%. Electricity and gas prices rose by an average of 200%. The water service prices increased almost 300%. So, and even the government reduced the taxes on export. The result, the inflation doubled. Here, we can see here, this is the exchange rates from 90 to 15. And in this period, inflation was from 20 to 40. Of course, so it's Argentina is a laboratory, so it should be easy to understand these things, but well, apparently not. Also, it's important to analyze the financial fragility. The inflows you can see in this graph, you can see the gray bar is import out of export, in order to have an idea of the necessity of finance the trade account. The orange bar is portfolio assets and other investment out of export. So this is outflows. You can see it was important in 2011, just before the exchange rate control, and Macri, well, eliminate the control, and look that the financial flows wasn't important during the Kirchner government because many reasons, because they don't want it, because the interest rate, because the holdouts, and during the Macris, it was we had a big jump or the inflows of financial flows that allow to finance not only the current account but also the capital outflows. And these capital inflows allow to stabilize the exchange rates. Because Macri tried to, after the evaluate, increase prices in general, he tried to obviously to reduce nominal exchange rates, that it was not easy to do because the Argentina or Union's organization. So he tried to stabilize the exchange rate with capital flows. in relation with the price dynamic, you look at here, the gap between the nominal wage and the price is the other way around. We can see that nominal wage tried to recover the real wage, but it couldn't, so we have a reduction, a real wage, so we have another trigger of inflation in comparison to the other period, but the result was, so the nominal wages try to go to improve the real wages, that it wasn't possible. And look at this. We have, well, I'll talk about that. We have a financial crisis here, and in this year, the real wage decreased 12%. So, continue with Macri, chronicle of a crisis foretold. Several events in the early month of 2018 triggered the sudden stop. First, the reduction of the domestic interest rates, the increase in the US interest rates. Consequence, you can imagine, the central bank lost 12% of its international reserves for February to June. Currency depreciated by 40% during this period. Argentina signed an agreement with the IMF in June. So, well, yes. No comments. The increasing exchange rate volatility quickly translated into a higher inflation rate, with peaks in September and October of 2011, leading to a real wage decline of near 12%. So after losing a third of foreign currency reserve between July and October, and loss in the general election, the government reintroduced the exchange control, a stricter restriction than those imposed by Cristina Kirchner. So here we have a new swing pendulum. The Peronist government won the election in the middle of the high macroeconomic stability. So the challenges, the government faced many challenges to continue and finance its external commitment, but also the government, the Peronist government, faced many challenges in meeting their domestic commitment, because in the middle of this mess, the government promised the recovery of real wage, the reduction of poverty, the reactivation of the economy, and, well, these things. But we have a kind of the seventh plague. Current account deficit. This is efficient international reserve of the central bank with strong financial restrictions, the need to address the restructuring and renegotiation of external debt with private and multilateral organizations, the debt with the IMF, the COVID pandemic, the Ukraine war, and a severe drought between the late 2022 and the early 2023. Obviously, the macroeconomic fragility warns throughout the entire period between January 2020 and September 2023. The central bank reserves decrease and the official nominal exchange rate rises 183%. And you can see the same figure, the same meaning of the of the line, you can see here the acceleration of inflation. So in this period, the trend of nominal wage variation and CPI variation, it's the same. You can see the difference because it's one along the other. So while it continue, we have continued devaluation, increasing nominal, it's a spiral between nominal exchange rate and nominal wage variations. Exchange rate volatility drove a financial fragility at the growing influence of political forces demanding dollarization, because in the middle of this mess, the person who was running for president said that he wanted to dollarize. So in the media we can see the economists say, well, we do the math, so the exchange rate should be 7,000,000% because the monetary base, well. So this accelerated, of course, the instability, intensify expectation of devaluation, pushing inflation rate above 10% monthly. So, well, here we can, a typical dynamic described by Tavares and Beluso about the dynamic of expectation formations. I mentioned that, well, the loss of reserve in a context of conflictive societies regarding income distribution, the scenario of general elections, so the influence of devaluation expectation and future prices on inflation dynamic was exacerbated, and these are constantly revised upwards to hedge against potential future losses in a context of high nominal volatility. Even firms don't sell at the end of the year, because it's impossible to calculate the cost of reposition of the products. So gradual devaluation triggered wage demand and perpetuated an inflationary dynamic in a society in conflict over income distribution. In that context, the monetary authority raised interest rates to prevent the accumulation of external assets. This dynamic started an inflationary spiral involving a feedback mechanism between wages, interest, and exchange rates. And particularly in the end of the year, the process accelerated as the expected margin becomes unstable and challenging to predict. And I quote Tavares and Beluso, supply prices planned by producers tend to be significantly exaggerated in an attempt to anticipate a potential devaluation of liquid capital. This dynamics leads to the overall supply price departing from the normality condition of production price within a capitalist enterprise. We live off this. And you can see here, again, the same graph, the accelerated inflation. Of course, we lost the elections, so we have a new pendulum. The name of the period is, I quote my president, that he self-defined like the mole that destroyed the state from within. And also he defined himself like Terminator that came of the future, and also he defined himself like a leader of the world. Well, many definitions. Well, in the new pendulum swing, President promised a drastic reduction in public expenditure, the elimination of the central bank, still don't do that, a full economic liberalization and dollarization, he devaluates the regulation of the economy. It's not happening. And obviously, this caused a spike on inflation that was partially offset by a significant reduction of public spending, recession, the reduction of import. You can see the classic contractionary, the import in the first term of the year, it was almost 20%, and he could discipline of the working class. So still now, I don't know, next week, the government managed to stabilize the valuation expectation with the typical contractive adjustment of the current account. However, the economy has not resolved its financial instability, because we can hear many colleagues saying, well, now, yes, he could it. He stabilized because he do what we need to cut spending. But if you see, the cause of the financial fragility is there and worsening. From my point of view, the government hope is that external capital flows, IMF, and investment in primary sector will provide the dollar needed to eliminate currency control that we still have. The elimination of the exchange market control is an eternal dream. So I think the aims to achieve an stability similar to the 90s with high unemployment and market openness. Well, nevertheless, the path to achieving this remains uncertain as financial fragility persists in the very short run. So some lessons and final thoughts. There is nothing special in theoretical terms about Argentina. I always hate the Kuznets phrase that there are three kinds of economy, old economy, Japan and Argentina. I hate this phrase. And well, no, it can explain with theory. The price dynamic is understood as a result of conflict between wage increases and devaluations in a price-taker economy open to trade and financial flows. Inflation performance can be explained by devaluation triggered by dynamics linked to the external sector, especially resulting from financial deregulation. In this scenario, conflict inflation manifests through a persistent exchange rate wage spiral. And lessons that for Argentina, monetary authorities would seek to maintain foreign currency reserves to cope with capital outflow and mitigate devaluation expectations, and also regular, this is pendulum. Zero capital inflows or all the capital inflows. For this objective, keeping domestic interest rate higher than the international rate to cover the devaluation risk and implementing financial flow regulations are essential starting points. In this sense, price stability requires exchange rate stability. Thank you for your attention.
Thank you very much to both for very interesting presentations. So now we will open for a round of questions. Matthias, Santiago, please come here so the camera gets you.
If I may, a brief comment, really. So I do agree with you that Macri is the place where, for Florencia first, where things go sort of sour. So in the sense that they took the Kirchners. Why wasn't a problem before? Because the Kirchners through the two renegotiations of that, reduced that. I wrote it 2014. There is no chance Argentina will have a debt crisis, given the situation at that point, even with relatively low reserves. But I think there is a need of more emphasis, those inflows that you were showing, which is very nice to show the inflows and the outflows, because they all go out. They come in and they go out. Is that Macri did two things there. One, it's part, for brief periods, they actually did increase the interest rate and have the differential was actually favorable. So they did that for a while. And at the same time, they contracted a lot of the loans. And so they contracted a lot of the sort of, including the IMF one. And that's part of the story in the legacy. What I would say is, I don't think that that's a mistake. So when I talk about the new pendulum, I always say those things that look like mistakes sometimes are instrumental. So because they tie the hands of the government that comes next. So Guzman, with all his problems, he comes with his hands tied and has to renegotiate with the IMF and so on and so forth. So the failures of the conservative, or whatever you want to call it, right-wing sort of governments is less of a sort of a failure. To Carlinhos, again, a comment, and we can talk about some of the other stuff. So it is true that, and you kept saying, because there are two exceptions, Venezuela and Argentina, and there are two exceptions. But there are two other exceptions too. You kept sort of saying, well, one is Brazil. Brazil doesn't grow since 2015. Argentina doesn't grow since 2011. Brazil doesn't grow since 2015. And the other is Mexico. So the two countries that do not grow, not because they can't, it's because they don't want to. And I think that that says something important about the sort of more global pendulum, if you want, in the more regional pendulum in Latin America, how we go back and forth from the right to the left.
Thank you, Matias. Now, Santiago.
One brief comment on Medeiros. I don't understand, correct me if I am wrong. You said that the controls in the exchange rate market make stop the financial instability in that market, or I understand badly that idea. To Florencia, I don't know if the level of conflict inflation can be reduced in the near future due to unemployment and the increment in the informal labor. So there is a hope to decrease inflation through the pauperization of the labor force. Thank you.
Thank you, Santiago. I actually also have questions of my own. So first to Medeiros, two questions. The first one is related to Laura's presentation yesterday. So she argues that there was less external pressure in the 2000s, from 2004 to 2014, because growing commodity prices would allow for overvaluations, would diminish the conflict domestically, which would allow for political coalitions to increase wages and so on. So how I would want to, your opinion, how do you see that? Do you think after 2015 is, although we don't have a balance of payments constraint, do we have a less favorable external conditions in terms of conflict, also for a political coalition to bring public investment, as you mentioned? And the second question, you mentioned this new international division of labor centered in the dispute between the US and China, and you mentioned the industrialization by the sectors of extraction. Which other sectors do you think could be of importance in terms of the developmental strategy for Brazil in this new international division of labor that you see forming? And my question to Florencia is actually on your last point, because looking from outside, from a Brazilian perspective, I think the structuralist view is usually that we keep inflation low by increasing interest rates and controlling the exchange rate. So interest rates are usually, the channel is usually through not allowing for the devaluations. And in the end, you mentioned the importance of having a larger interest rate differential with the Fed. But before, you also said that in 2018, I think, when there was an increase in the interest rates, there was an inflation spiral. So my question is, what are the challenges for, first, is the increase in interest rate enough to control the devaluation? And second, why has that not been implemented before, as in other countries? I think we have time for 2 rounds. Those are 3 questions. You're the chair. You're the boss. Thank you for your comprehension.
Yes, some reaction when we talk about a pendulum, there is a kind of symmetry between the right wing and the left wing. There is no symmetry in the capacity of government after the swing, because always, military in the 70s, and we have the 80s, the death of the 70s, the death of the 90s, the death of Macri. Yes, for that reason, the fear is that the pendulum break in the wrong right. Yes, always the progressive government have many problems to do things, but well, yes, I completely agree. Conflict union, Santiago? Where? I think, at least in Argentina, the union of the main sectors is very important, and I don't think that the informal markets reduce the conflicts, inflation. Macri, when he win, tried to put in jail. He's intelligent, because I don't know if Macri knows about conflict inflation, but the first thing that he tried to do was to send to jail to unions. But I think the informal market, it is a very important phenomenon that explain part of the Milei's election, should be considered, but about conflict inflation, unions in Argentina continue being very important in metallurgica and these kind of things. Yes, interest rates, yes, it appears different things. First, it's important to have, because financial dependence and balance of payment constraints, it's important to have a positive interest rates to have international reserve. But this is not was done by Kirchnerism, because I mentioned that it was a way to ease the conflict between profit rate and wage, and because I don't know if it's what he wanted to do that, but the idea is that financial sector is bad people, so they are not worried about the balance of payment because the situation, and it was wrong because they didn't do political policy and didn't do accumulate international reserves. So we finally have a balance of payment. Macri increased the interest rates, but he do it with a complete deregulation on the financial sector. So you need to have a positive interest rate, but also to regulate the capital flows in order not to have an over-indebtedness. Argentina have the particularly, in comparison what I see in the statistics, in the 90s and during the Macri's government, the inflows of portfolio flows in comparison to export was mad. If the average of the Latin American was, I don't remember the number, but for example, 20 in the peak, capital inflows out of export in Argentina was 100. So this explains the financial instability. So it's a condition, it's not the solution, it's a condition. What happened last year, that we are in the middle of the mess of accelerated inflation, and in that moment the dynamic was no linear, so it was impossible to solve such financial instability of last year only increasing interest rates. So I think in this case, you are in the middle of the financial crisis. It's not enough to increase. I don't know, but we have many things about this, but we begins with this problem during the Kirchnerism. We have negative interest rate. I don't know if I make a bit clear that point. And no more question for me? No.
Yeah. Yeah, I think, Matias, that Brazil and Mexico has this aspect in common. Maybe Juan Carlos puede hablar un poquito de México, pero the problem, consider, for instance, this experience in Mexico, this idea, this processing, export processing areas, this maquiladora mexicana. Well, there are a lot of maquiladoras in China and Malaysia and Thailand and all that. But in a context of overall a lot of other investments and public investments, connecting these kind of maquiladoras, increasing the multiplier effects of the exports through the whole economy. This is not the case of the Mexico. So this is something that could be different. I think that this is a kind of general interest and or the block of interest of political groups that just make the main policy in Mexico economy. In Brazil, the same. Well, we can say that there's a lot of good papers on it. That is, Franklin wants to publish something like the short golden age. This is the first decade in Brazil, because in the first decade in Brazil, we have a strong increase in wage rate. As I said today, some comments on Conceição Tavares' paper, there's something changed in Brazil in the first decade. One aspect was the wage rate that increased a lot, and the other was a brief recuperation of public investment. This enlarged the possibilities to a new kind of trajectory of growth, but the distributive conflicts that emerged in this process just discontinued this trajectory. And then a lot of pressures connected with the high pressures of inflation and nominal wages increasing, the real wage increasing more than the productivity in several industries activities. So that I think that we had a kind of Argentinian conflict. Well, at that time. But the answer of the government just in 2015 was just block completely possibilities for a more gradual adjustment. And then we had a real low rate of growth from 2015 until recently. So that we had a political dimension that has changed our historical tradition of growth without growing wages, with a lot of social exclusion and all that. This just diminished at the first decade. So I think that it's really good to make this a comparison. We had a sort of golden age at this first decade. I think that the political problems we are associated with this. Well, I think that what I said, what is the problems with the big difference in financial integration in the second decade, different from the 90s. What that? Imagine that we were in the 90s, the circumstance that prevailed in the 90s, and imagine a big crisis in the United States as the great financial crisis. What would happen? A strong crisis in all South American countries, as happened in the 80s, as happened in the 90s and all that. But did not happen. And why is it? Because the circumstances have changed. The balance of payment has changed a lot for most of countries, except Argentina and Venezuela. So that it's really different. But we had the exchange rate that was more manageable, not as a fixed exchange rate of the 90s, for instance. We have a lot of reserves, and even the spree of debt, this debt was not public debt, external public debt, was more private debt, and a lot of direct investment. So that even we had a deficit in current account, but these conditions were much better than we experienced during the 80s, during the 90s. This makes the difference and open more space to grow. But this depends on domestic policies that we didn't have. You asked about what kind of sectors and all that. I think that one really important thing that could be considered here is that China became a huge investor in the region, in a lot of areas, but more connected with energy, more connected with now in Brazil nowadays is connected with the possibility of electrical vehicles, and there are a lot of other possibilities and experience that are connected with this kind of investment. For instance, in Brazil, we have some technological partnership that can be developed if we had a lot of investments and decisions to do that. So I think that when you consider minerals in strategic areas, when you consider new energy, when you consider possibilities of technological cooperation in many aspects, I think that we could use this this competition between United States and China and use this as an instrument to bargain better conditions in a lot of areas that are just connecting. So, please.
Thank you very much for you both. I know everyone is tired, but we still have 10 more minutes. We will ask you to stay strong just a little bit. We have a short last round of questions.
Florencia, I'm curious about what happened with exports after Milei, and what are the perspectives of sports after Milei? You expect a growth rate of exports, or what are your suggestions about this? Oh, sorry.
Thank you very much, and congratulations for the session, for your presentations. Just perhaps a suggestion for both of you. In your taxonomy of Latin America, Carlos, if you introduce the relation between export revenues and fiscal revenues, perhaps that would be very interesting. And also, that would be like introducing like the political economy of exports, fiscal revenues, and also the source of the external debt. Say in 1982, or financial crisis or the balance of payments crisis was very linked to public debt. In 1994, it was very linked to private debt. And in some of the cases, I mean, in the orthodox view, this idea of the twin deficits, your boom, the commodity boom, is great, and in some countries it means not only a revenue, I mean a boom in foreign reserves, but it also means a fiscal boom. And on the other way around, when you have a collapse of the revenues of commodities, then you also have that type of crisis. And in the case of Argentina, in Mexico, one tends to think of conflict only between the entrepreneurs and the workers. But I think in Argentina, it's also the conflict between exporters, workers, and the government. Perhaps it's a different situation in Mexico and how are the revenues generated. It used to be oil, now we have the American automobile companies, but introducing that taxonomy may help to distinguish some of them.
Thank you. We have the mic there.
About exports, I think the problem with export that exporter don't, how Matías, I say, liquidan las exportaciones? Don't sell. They don't sell the primary products because they are waiting for the valuation. They have a big silo. Yeah. That's a financial sort of gap. Yes, yes. Because the expected valuation is big. Yes, expectation of the valuation. Yes. We have the blue. Last week, the blue is increasing again, so the exporters say we are not going. No. Nothing is sustainable.
If the IMF gives them a huge chunk of money, then it is. If the exporters decide to come and sell it, sure. They did have some of that. So part of the story is that early on this year, and that's why they managed to hold it a little bit, is they did come and sold all the exports because they had terrible 3-4 years, and so they needed the money. So they went, even though they were expecting that this would go sour, they did sell some. All of a sudden, they have a little bit of dollars, so they could hold exchange rate. So for a while, it was holding. The people on the left that she cited, old friends, saying, oh, you see the fiscal adjustment and the devaluation, it worked.
Yes, first, Milei, we have a chance because of Milei, of the inflation. Now he is reducing, and everybody, or almost everybody, believe that, okay, we are okay, but no, it's circle. Exporter, financial, sustainability, everything is about to explode, we hope.
Yeah,
yes.
I should, if I may. So there is a risk which they actually do get some money from the IMF. They're trying to negotiate that. If they do get some money, this could be sustainable for longer, and and maybe it does stabilize, and maybe this doesn't explode. So I don't I think there is a terrible scenario in which Malay succeeds. I don't think we cannot exclude it completely. I think it's low probability at this point.
Yeah, in Argentina it's also continue being between profits and wages. Yes. Yes.
No, just to say that it's very different to have a public or public guaranteed debt and a private debt. I think that is important. Of course, there is connections and problems, but it's different. So that this is our circumstance nowadays. So it's part of the changes that happen with our financial dependency. But okay, but it's a little bit different. And it is.
Thank you very much. Let's give a last round of applause.